Good morning, Armor Insiders. Welcome to the morning meeting of our virtual hedge fund. We're going to get to that stock in a minute. Let me remind everybody before we get started, this is our live look-in. We do this every day, 9 o'clock to the open at 9:30. This is our morning meeting. We have a virtual hedge fund we're running. And I'm going to share with you information we use to manage our macro fund, which is big picture market direction, where we're long, usually double the indexes. When we get long, we use precious metals in that portfolio. So we're going to go over that strategy and where we are right now and where we may be by the end of the week. A lot of cross currents, a lot of noise. So we got to try to see through that. Then we'll talk about top stocks to watch, top stocks to buy that are actually in our Armor Invest portfolio. And of course, we may touch on our Armor carry trade where we're trading the indexes. Had a pretty big day yesterday, so we might touch on that a bit. Before I get started, don't forget, whatever I say, whatever you hear anywhere else, wherever you're collecting your financial information, you got to figure out your own strategy. What's your risk tolerance, goals, all that stuff, and execute your own strategy. Only you can be the smart money of your own assets. All right, so first thing to do is dive in real quick to some. I like to start with the big picture macro, and then we can drill down into some other issues after that. So first things first, we have to look at small caps. All right, so the risk monitor went red Friday when the markets all collapsed across the board, same type of collapse in every index, particularly if you remember my conversation Friday, the equally weighted S&P just looks god-awful, right? So there was a double top breakdown below the 50-day moving average. But something interesting is going on in small caps. They're definitely taking the lead right now. Small caps closed above the high of the big down day Friday. Now, it hasn't eclipsed the week yet, but that's incredible strength for small caps. And if you look at small caps versus a basket of big caps, they've been a long-term downtrend, and they're just starting to break that downtrend. It wouldn't be a surprise at this stage in the cycle for small caps to lead for 3 to 6 months. Sometimes at the end of a wicked bull market, you get that type of action, and it lasts longer than you think. This will be bullish for concept stocks. Stocks with no earnings, no revenue, but everyone thinks they're the next great thing. Those stocks can go to ridiculous valuations at the end of a bull cycle. So it's really kind of interesting. What are we going to do with the risk monitor? Well, if we end the week and small caps are at a new weekly high, and so it becomes very evident that last week was a shakeout, risk monitor won't be red. It will be at the very least yellow, and depending on what the other indexes do, could flip back green. Sometimes that happens, particularly in a cycle that's this strong. That can happen. The risk monitor is about looking at all 10 assets that we monitor using our algos. And when we see the same thing across the board, we're most bullish. We put most of our capital to work. That's risk monitor green. If we get into a market where you see the weighted S&P really lagging, which is a big, 500 of the biggest stocks on a equally weighted basis. Equally weighted, RSP, right? If that's really lagging, but small caps are going like this, it's going to be hard to get to risk monitor green, to be honest with you, right? If the weighted index, if the S&P, which looks like this, okay, big down week and hasn't done anything to, change that red posture, right? If those indexes, let's say they grind sideways at best. If they're breaking down, the small caps going up, you have this strange market. It would be a risk monitor yellow market. What does that mean for us as we run money, right? I have a flagship fund, and I share with you all of our positions there. So right now, the flagship fund's about 60% cash, and we're keeping up with the market. Like the 40% we've got invested is just, kind of ripping higher in here. So it keeps up with the market. We're not losing any steps, and we've got 60% cash. So number one, I don't feel compelled to chase anything, and nor should you. If you've been working with the ARMR report or ARMR investing way for the year 2025, we're having a monster year. You know, the risk adjusted rate of return of what we're doing is just off the chart this year. Truth be told, we don't have to do anything between now and the end of the year. We can just coast. You really got to start thinking like that. This is not so, like, the last thing you want to be doing is chasing something because you don't need it. I mean, you should never chase, but you certainly don't have to now. So when the risk monitor, let's say it goes yellow at the end of the week because small caps break out, other parts of the market are, you know, doing well, commodities keep going up. So there's opportunities out there. So I won't be holding 60% cash. I could be holding 30% cash. I might put half that cash to work, and I'll put it to work in the areas that are really strong, which probably means small caps. Some portfolios, I might just use small cap index, UWM. I might do double the small cap index because there could be a 3 to 6 month window where you get real outperformance there. In other portfolios, I'll be picking my points on stocks that are, I have the stock to watch list, right? That list, that whiteboard, we're watching these names. I'll go over a couple in a minute. Those are the names you would find in the portfolio at the end of the week, if we get a weekly close that's strong. Okay. So before I get to stocks to watch and stocks to buy, some things we added yesterday, I want to take this minute to have an ARMR Investing Way discussion, as I like to do every Wednesday, to help you understand what we're doing on this desk. And the most, what I want to try to focus on right now is the difference between a virtual hedge fund desk and a real hedge fund desk. And you'll understand from this conversation, I hope, why it's so important for us to have a certain decorum on our live trading desk, right? ARMR Insiders, I'm talking to you. We're live all day. I'm trading with you all day. We're sharing ideas together all day. It's important that we work as a team, that we pull on the same oar, that we support each other, that we make each other better. This is not a discord room. We're not shooting against each other. We're not looking to have arguments. This is not a discord room. This is not a Yahoo chat board. You could do all that stuff, but the other guys out there are doing whatever they're doing. Okay? That's a total waste of time to me. So let me try to explain this so you understand why I kind of came in hot on Monday morning. Okay? I hope this will explain it. A virtual hedge fund versus a regular hedge fund. I ran hedge funds for a decade. Okay? Used to manage capital in New York City, had individual investors. Dad and I were running around 300 million at our peak. Okay? Largest business in the country for Lehman Brothers and then a couple other wirehouses we were at. And we took the top, let's say 20% of our client base, guys we really enjoyed working with, and we rolled it into a hedge fund. We did that in 2005. We managed our hedge funds for a decade, one of which was a precious metals fund. So you understand why we're always focused on gold and silver. And so a real hedge fund, right? There's many different ways to explain it, but I'm going to explain it this way in case you're not aware of this. If you're a hedge fund investor, you invest capital in Rosenthal Capital Management, the hedge fund, right? So capital comes in, it goes into a pooled account, right? So all the capital goes into one account, trading one account, The investor does not see what stocks are in that portfolio from a day-to-day basis. Our hedge fund, we updated once a month, a quarter, half the year. That's what we did. A lot of hedge funds don't update you for the whole year. They have lockup agreements. You can't take your capital out for 3 years. Depends on what they're doing, right? Dad and I always had a policy of once a month you can redeem or add capital. But to understand what a hedge fund is, so you're putting capital into a pooled account. You don't see what's going on all month. If you're lucky, you get a conversation once a month and you just see your performance. Okay. On my end, that required an insane amount of administration because we're handling assets. We need outside administrators, compliance, legal, all kinds of departments, right? And so at the end of a decade of doing this, having been a little bit burned out by all of that excess stuff, I was at a meeting, one of these, meetings, right, of managing this business, came across Interactive Brokers. So in 2005, when I started doing this with Pop, there's only one way to do it, and that was running a hedge fund. So that's what we did. Then we bumped into some guys at a meeting from Interactive Brokers, and they had this wonderful system where you can cut out 95% of the costs of running a hedge fund by simply building a business inside of Interactive Brokers. So what happens now is, and so we closed down our funds and we rotated over to individual portfolios, all at Interactive Brokers from our investors, all of which are connected to our umbrella. And when we buy or sell assets, you hear me do it all day, we have baskets. That's probably like 3 different baskets for all of our investors. They're in one of the 3 different baskets. And when we execute, everybody gets the same price, right? On the way in, on the way out. So when you see me post these prices in the on the portfolio page of our website, ARMR Insiders can see this. These are the prices that we're using for our virtual hedge fund. So it's virtual hedge fund now, right? Guys have access to their capital on a daily basis because it's their portfolio at Interactive Brokers, right? All of the administration is done by Interactive Brokers. All I have to do is manage capital. It's fantastic. It's freed up and unbelievable. I'm out of my dime to actually manage capital. And so what happened in 2019, after countless conversations with my wife, real sweetheart, she says to me, these are fun conversations. Why don't you start a YouTube channel? The beauty of marrying a millennial, one of the many beauties of marrying a millennial. I was like, okay, I'll do it. I'll try it. And lo and behold, we have this, right? And so what I'm doing here is I'm sharing with you real information that I'm actually using to run a hedge fund, albeit in a different form. This is not a Discord channel. This is not a Yahoo chat board, right? This is real information I'm really using to run capital. And we're managing more capital than we ever have in this structure before. Number one, because we've had a huge year, so our assets have ballooned. And number two, as you recall, ARMR Insiders, I opened the window to take on new investors this year at the request of insiders. So a number of ARMR Insiders who've been working with me on capital. I said, okay, we can start. Right? So it's incredibly important to me that when we're sharing information in the room together, you understand the thought process. You keep hearing me say, this is a virtual hedge fund. Think for yourself. Run your portfolio. Be the smart money. What it really means is I'm asking you to be professional and be on a trading desk as if you were at a hedge fund. That's what you're doing as an ARMR Insider. So we're going to share information together. You don't have to. An ARMR Insider doesn't have to share information, right? But I love it when you do, right? So anything that comes across your desk that you think is interesting, it doesn't have to be an ARMR idea. Don't look at it and say, well, the chart's no good, I don't want to add it to the room. Don't worry about that. You add whatever you think is important to you. Then we do the research. We'll create research reports if we think it's necessary. We'll put it on our whiteboard. It could be 3 or 6 months later. I'll come to you and say, hey, that idea you added 6 months ago, bang, it's ready right now. Armor algo buy trigger, chart pattern, perfect. Let's put money to work. You know, the fun thing about it, there were really 2 reasons why I started the Armor Report and the Armor Investing Way. The first reason that I started this virtual hedge fund with you, I was already running the hedge fund, right? And we shifted it over to Interactive Brokers and we run it just like we run a hedge fund. And I made it virtual working with you. One of the primary reasons was that I thought you guys would really help me execute. And you have. I want to thank you for spending time. If I share with you constantly what I'm doing, I better do it. I better do it. Feet to the fire, right? I can't share something and do something else. So you keep me honest, and I love that about you, and I appreciate it. It's made me a much better investor and trader. The second reason I did it is I've been doing this for 35 plus years. I've worked with thousands of investors, and I wanted to save you the pain that I had to go through along my way, right? So I created the Armor Investing Way to share with you my failures and how to avoid them, and my successes and how to duplicate them and double them. I thought I could help you. That's why I do this. I really enjoy passing on the information to you and seeing you succeed. I don't care if you buy my stocks. I love when you buy your own and you make a lot of money. Excellent. You're executing your strategy. You're following your rules. It's great to see. So those are the 2 reasons why I started this process that's blossomed into something really special, because of you. The third reason was the reason I keep doing this. Like, why do I keep doing it? The third reason really was a surprise to me. We ended up building a network of Armor insiders all over the world. I mean, we've got guys, Israel, Poland, Germany, UK, obviously Canada, the US. We've got South America contingent, recently Panama, to go along with Argentina, Peru, Chile, and then the Far East, Vietnam. I love you guys. Singapore, Hong Kong. And so what's happened is when you guys share your information in the room, it creates a target-rich environment. You guys bring things to the room I would never think of. That's led to a lot of success for us. So those are the 3 reasons why I keep doing this. And I'm going to keep doing it. And so it's just to wrap up this thought. It's incredibly important to me that we run this live trading desk in a manner where we're all working together to make each other stronger. That's my thought for you today on what it is we're doing here and the differentiation between what we're doing and all the other Discord rooms out there. Okay. Anyway, I can't wait to get at it again at 9:30. It's 9:20 right now. And I promised you stocks to watch and stocks to buy. So let's go over stocks to watch, stocks to buy. We already own. So first, you know what? This is kind of interesting and kind of important. So what's the first thing I'm going to do if the risk monitor turns yellow on Friday? First thing I'm going to do is increase the size of all of the positions where I'm trading around the core. That's part of the Armor Investing Way. So when the risk monitor goes red, we don't sell everything. We cut down anything that hits a stop is out, but we cut down all of our other positions to a core size that we want to hold long term. If they stay above stops, we're going to hold them long term. And we trade around the core of that position. So one of those names is Cameco. And it looks like, of course, uranium is continuing to rip higher. So we increased yesterday our Cameco position. We already have it. We cut it down. I put it back to an average size. And I would say the top stock to watch today is probably going to be NXE. Okay. So when I say top stocks to watch, it's a stock that you may see in my portfolio. In fact, I've already nibbled on it. So I own it in the Armor Invest portfolio. It might end up in the flagship fund. Just a quick reminder, Armor Invest. So I'm running a hedge fund here, right? So Armor Invest owns, if I own a name and it's on the spreadsheet, it's in my hedge fund right now, for lack of a better way to describe what I'm doing. It's in my hedge fund now. And then, which is my family office, right? The family office capital, which I run a little more aggressively than the flagship fund. Okay. So I've nibbled away on NXE yesterday, and I'll probably make it a full position today if that stock's breaking out. Okay. So uranium is on a ridiculous tear. You all know this. UEC has skyrocketed. Quad U's, I don't even know if that's uranium or rare earth anymore. That thing's gone ballistic. I think NXE, with this perfect chart pattern, one of our favorite rectangular patterns, looks like it's about to go. And so we're going to own some NXE. Another name at the top of the list, I've nibbled on MP. I talked about this last week. This was a high tight pennant off of a huge chart pattern. See that? That was a huge weekly breakout, and then it made a high tight pennant. I love that. We day traded it a couple times. I've held it overnight now. There was a Bank of America upgrade on this stock this morning. Price target of, what was it? 112, up from 78. They're going to be behind it all the way up probably. But honestly, I think 112 is kind of light. If it closes above 100, it's probably going to 130. That's usually what stocks do that bust through 100. They usually jump to 125, 130. It's just the way the market works. So I would, if you're going to say 112, you may as well go 130. I think that's probably where it's headed before this particular pattern exhausts itself. So I think there's another 30% in that stock if it breaks out. So those are a couple top stocks that I would say to watch. Names that are in our portfolio where I would bump up the size if we see the risk monitor change. We own ARM. I'm probably going to make that bigger. BTU, I wouldn't add to that. I've reduced it, and I wouldn't add to that unless there's weakness. That thing is just skyrocketing. We own it down in here in the 15 to 17 area, and the stock's doubled. So I'm not going to be chasing that. Cleveland Cliffs, I'm booked some profits there. I'm not going to chase that. Cannabis, let me tell you something. If small cap stocks blow out, cannabis is probably going higher. That's my guess. Of course, we need a reschedule. So who knows when that's going to happen, or even if it does happen. But the chart pattern's setting up. And if we get lucky enough to have small caps leading for a 3 to 6 month window at the end of this bull market, then that's a perfect environment for cannabis stocks. I added Telray to the top of my list yesterday, and I was actually buying some of that on the weakness, which might shock some of you because I normally don't buy a falling knife. But after doing the research, and you can find this on our Substack, we just posted our research report, Armor research report on Tilray. It's on our Substack, which is armorinvesting.substack.com. You can go check it out. And in fact, subscribe. It's free. We post our research there. When we post research there, don't forget, it doesn't necessarily mean we own it. It's a research report. It goes on our list to watch. We'll tell you if it's a stock to buy or a stock to watch. If it's a stock to watch, which this is, we might be adding little bits of it, but we haven't elevated it to a buy yet, right? Got to be an Armor Insider for that. When we're buying it and it's 100% long, of course, we're sharing that with Armor Report subscribers, Armor Insiders. But you can get our research there at Armor Substack. All right, armorinvestingsubstack.com. All right. So added a little bit of Telray and doing some research on that. I think that's special, and it's going right next to our organogram position, which we already own. Okay. Probably going to bump up things like VRT and Dell. I might put those positions back onto full size. You may see me do that with IBM. We sold it a bit higher. We buy it a little bit lower. We might do that. So those are some of the positions that are in a portfolio we might be adding. I'll tell you what, I really like the utilities. We already own these stocks. Southern Company is blowing out, which is leading. Duke is following. Dominion's next. And AEP is also leading. These are our 4 favorite names that benefit from the AI revolution. I've got 3 minutes left. So they're utility plays with a dividend that have a growth kicker because of what they're doing with AI. I think that's it for today. I think that's it, guys. Those are my top stocks to watch. They might be stocks we're buying either today or by the end of the week, depending on what the market's doing. I wish all of you a wonderful trading session. Thank you for spending time with me. I appreciate it. I hope you find it helpful. If you have any questions, throw them into the comments section. There is a comment. What's the question? Oh, you're welcome. Thanks for sharing. I appreciate you. Thank you for being here. If you have a comment, put it in the comment section. I'm happy to answer it throughout the day. If you guys have a question, Armor Insiders, I'll see you in 2 minutes on the live trading desk as it gets started. We'll be trading the indexes on a day trading basis as we do. Everybody else, have a wonderful trading session. Remember, whatever I've said, think for yourself. What's your risk tolerance, what your goals are, and then execute that strategy with ruthless precision when the bell rings.